Owning rental property can be a great way to invest money and generate long-term wealth. Plus, you get to be a landlord. There are various types of property you can decide to own, from mobile homes and single-family rental homes to condos and townhouses. You can also decide to invest in rental property through crowdfunds, fractional ownership shares, and REITs. This diversity of options available for potential investors is one of the main benefits of real estate. When considering investing in rental property, you should keep in mind that real estate is not exempt from the laws of demand and supply, as demand for rental properties and housing prices may fluctuate based on the current state of the market. Although owning a rental property may seem like a lucrative investment, it might not be the best option for everyone. While it has its advantages, owning and renting out property still has some disadvantages that may put you off investing in rental property. Stick with us till the end of the video to learn some of the reasons why owning a rental property may not be the best idea for you. Welcome to this channel. Today, we'll be taking a look at some of the pros and cons of owning rental property. Before we continue, please like and subscribe to the channel to stay up to date with our latest videos. And now let's examine some of the greatest benefits and drawbacks of owning a rental property. Let's begin with some of the advantages of owning rental property. One of the main benefits of owning rental property is that it helps diversify your investment portfolio. In line with the saying, never put all your eggs in one basket, owning rental property helps investors invest funds in real estate, which helps to diversify their portfolio and mitigate risk. Another benefit of owning rental property is that it helps to reduce volatility. Volatility gauges how much an asset's price fluctuates over a certain time frame. Low volatility is seen favorably by most investors since it makes long-term price and financial performance predictions easier. Owning rental property also gives you direct and complete control over your investment. When you own rental property, you can decide if you want to use it as a temporary or long-term rental, and you also get to choose if and when you want to sell your property. In addition to diversification, reduced volatility, and direct control over your investment, another benefit of having a rental property is the potential for consistent monthly net income. Renting out property may provide much larger profits than the S&P 500, which offers a dividend yield of 1.34%. On the Roofstock investment property marketplace, you can find rental properties available for purchase that have yearly returns of 5% or higher. Over time, the prices of homes in the U.S. have consistently increased. According to data from the Federal Reserve, over the past 15 years, the median sale price of homes sold has climbed by more than 52%. The cost of homes did, however, fluctuate during that time. Housing prices decreased by around 20% between 2007 and 2009's global financial crisis, and by a little under 5% between the fourth quarter of 2017 and the second quarter of 2020. The tax system in the United States is surprisingly accommodating to real estate investors. The biggest tax advantages for rental property owners include deductions of operating expenses from gross rental income, depreciation expenses used to lower pre-tax net income, capital improvements added to the property cost basis and recovered through depreciation, owner deductions like traveling to the rental property and continuing education costs, and a 20% pass-through tax deduction for qualified real estate investors. If you'd like to buy a rental property but don't have enough money for a down payment, then you could consider house hacking. House hacking is a common method of investing in rental properties for those who may not have sufficient funds for a down payment. A lot of investors start out by renting out a portion of their principal residence, then using the extra money to either raise capital or accelerate the mortgage payment. At some point, there will be enough money to invest in a rental property or enough equity in a primary residence to conduct a cash-out refinance to obtain money for a direct purchase of a rental property. You'll also have multiple options when you decide to sell your rental property. People who possess commercial real estate or even tiny apartment complexes eventually sell them to other investors. You should keep in mind that buyers may be hard to come by, if there is little demand for the asset class, such as for some office buildings or retail properties. The option to sell a single-family rental property to another owner, or a buyer looking for a place to call their own, is another option available to investors who own single-family rentals. Now that we've discussed some of the advantages of owning rental property, let's swing over to the other side of the equation and take a look at the downsides of purchasing rental property. One of the downsides of owning a rental property is the possibility of ending up with problematic tenants. Even if you put the best system in place to evaluate potential tenants, there is still a chance that you'll rent out your property to a bad tenant. Some renters are unable or unwilling to pay their rent when due, or they violate the terms of the lease by causing harm to the property or breaking the law. While obtaining a security deposit from a tenant can help lower the risk, most jurisdictions have laws that place restrictions on the amount of a deposit that a landlord can demand from a potential tenant. Owning rental property also requires credit and capital. The majority of lending institutions that offer loans for rental properties demand a down payment of at least 25% of the purchase price. Additionally, investors must maintain sufficient funds in reserve to pay their loans for up to 6 months and have a credit score of at least 620 out of 850. You'll have to consider the time and energy required to maintain your property. You can also decide to engage a competent neighborhood property manager to handle day-to-day tasks including tenant contact, rent collection, organizing repairs with vendors, and adhering to fair housing and landlord-tenant legislation. But remember that, whatever course of action you choose, the responsibility for your property will still rest with you. You'll still have to make certain choices, such as whether to carry out an expensive capital improvement, like repairing the roof, or when to dismiss a tenant. While owning rental property gives you a lot of control over how you want to manage your property, two costs that can be difficult to forecast and control are insurance costs and annual property taxes. For instance, property taxes differ greatly from state to state and may rise dramatically year over year as a result of the local government's operating budget. When creating a profit and loss pro forma before buying the property, some investors also fail to account for the fact that in some states, property taxes are adjusted each time a residence is sold. Continuous upkeep and repairs are required to maintain your property value and keep your rental property habitable. You can attempt to estimate your operating costs using the 50% rule, but you should keep in mind that maintenance costs can change from month to month. It is even likely that you may have a period when you experience negative cash flow because of a sudden increase in repair costs. The lack of liquidity is another challenge you should be aware of when purchasing a rental property. This simply means that it can be hard to quickly sell your property for cash. Homes can take up to 30 days to sell, even in the most competitive real estate markets. Investors under pressure to sell quickly risk selling a property for less than it is actually worth. To locate a buyer ready to pay a fair price, a seller could also need to do a sizable amount of repairs, depending on the state of the property. Although it may not seem so now, the real estate market operates in pretty predictable 18-year cycles, even though the value of properties has consistently increased. Real estate has experienced periods of hypersupply, recession, recovery, and resurgence on cyclical basis since the late 1800s. Property values may fall for a number of years before rising once again. Investors who purchase properties when their values are at their peak end up facing declining property values. While owning rental property is a great option if you're looking for an investment option, it is also good to be aware of some of the downsides to owning rental property. Thanks for watching. Let us know what you think in the comments, and please do not forget to like, share, and subscribe.